Welcome to Buy, Hold, Sell. My name is Matthew Kidman, and today we're talking about the 2017 profit season. Professional investors everywhere are walking around wondering just what happened. It was a pretty tough period. And joining me to discuss it is Captain Allfrey from Wavestone and Chad Slater from Morphic. And I'll kick off with you, Chad. Give us a number out of 10 how the season rated.
Out of 10? 7. 7 out of 10 I give it.
And what was so good? That's a pretty solid mark.
It just wasn't that bad. I think a lot of people thought it would be horrendous, particularly in small caps. And I think things are troughing out there. I think if you look at the miners in particular, it's going to be a better second half. Like if you look at spot prices and where they're going, I expect things to be higher, particularly retailers with some good Q4 GDP.
Right, so you can position your portfolio off the back of these numbers, do you think, for a period?
I think cyclicals into year end. They're unloved and people haven't been in them. And I think a lot of the mining stocks have come upgrade.
Catherin, do you agree? I didn't get the feeling. I think Chad might be a little bit optimistic. How do you feel about the last 4 weeks of profits?
Well, I'm still recovering, but no, it was reasonable. Look, we got growth, didn't we? I mean, there was earnings growth, mainly led, like Chad said, from the cyclical side. But, you know, it wasn't that bad. The problem was the outlooks for 2018, particularly domestically. There's some really sort of headwinds there. But overall, you know, it was okay. And
so what do we make of 18? Were companies just cautious, or is it there are real malaise there and companies are struggling to get their bottom line, let alone their top line, to grow?
They're reinvesting for growth, and it's about time, right? So we're seeing that across the board in most companies. Plus, they're also being hurt in terms of the outlook, in terms of the energy costs. We're hearing a lot about that, obviously, in the media, and it's starting to impact in terms of companies' bottom lines.
And do you think that's real, or is that an excuse? Do you think it's a genuine excuse?
It is a genuine excuse in a lot of cases. You know, if you're a high energy user, there's massive power price increases that we've seen, and it's feeding through. Okay,
Chad, you've given us a couple of sectors. So can you give us an idea of what really stood out for you, maybe a company name in the reporting season?
Well, this might surprise a few people. Platinum.
Platinum, the fund manager.
The fund manager.
And why was it so good?
We've been openly short that stock, written extensively about it, and my God, was it a good result.
Okay, so what do you do when you see that and you're short?
Well, thankfully we've been covering for the last 2 months, so we were actually down to a minimal position coming into this. It's incredible. The man has turned the business around in less than 6 months. And we have never seen, we've covered the fund management sector extensively, a business turn its flows so quickly. Hats off to him. He took all the short sellers' advice on board. And valuation higher than it is today, given what you saw? Look, it's clearly been driven a little bit by short covering, and I was one of them. But valuation-wise, it's come upgrade again. Most people still have outflows this year in their numbers. They're 2 months in and they've got inflows. So, look, it looks relatively expensive on 20 times, but I think you'll find it's actually trading on a 16 times by year end. Okay,
Catherin, this isn't a confessional like we just saw from Chad. Yep. Was there a result that you thought was outstanding during the period?
You just can't go past A2 Milk. A2 Milk was outstanding. You know, over 50% revenue growth and 150% profit growth. That was unbelievable, and the stock price responded, and there's more to come.
Okay, let's go to the other end. Something that took your eye that you thought, how awful?
Well, there were a number of disappointments through reporting season. HealthScope, BlueScope, Telstra, in terms of its dividend cut and outlook, all very disappointing results.
And does that give you an idea about the next 6 months where you should be positioned, or they're just individual situations?
They're individual, and you've got to do your hard work. You've got to understand, you know, the drivers behind the company's earnings and what's going on. But also, I would say that, you know, I agree with Chad in terms of the cyclical side. You know, banks, resources. I think they'll come upgrade over the next 6 months. Okay, Chad, you seem to like a good horror movie. What was a horror story in the reporting season?
Yeah, look, as you know, we're global investors who do Australia, but standing on the outside, Telstra. It's a ship, it's a big ship stuck at sea, adrift with nowhere to go and holes leaking. It is a horror story sinking.
The price has come down a fair way from its result, which was a few days ago now. It's had more bad news since. Is there a price that we buy Telstra?
Good question. Maybe, but it's a long way below here. Anyone who buys based on the dividend, I think they've already been negatively surprised. I wouldn't go near it.
Who would have thought that fund managers can be so optimistic, especially off the back of that reporting season?